Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the small business community. And today I want to talk about this court case of an S Corp owner where her income was recharacterized. Now, this is very interesting and fabulous timing because we seem to have a pandemic of S Corp owners that know absolutely nothing about all of the rules that go along with having an S Corp. And this case is, it covers a lot and it's very interesting. And I hope I remember to share the link to the court case. So if you would like to read it, if you would like to geek out on this like I did, then you can do that. But this is a case of Ward and Ward Company, the commissioner, and also Letisa Ward, who is the owner of the company, versus the commissioner. Now, first thing I will tell you what stuck out to me is that this case started in 2015 and we're just getting to an opinion in 2021. That's a long time to be going through some stuff for some tax stuff. So the backstory is this is an attorney who formed an S corporation to run her business. Okay. It says here that, she graduated, she had a lot of debt, blah, blah, blah. You can get all of her backstory information from the case. Like I said, I'll share that with you. But what happened is that she wound up getting audited because stuff just wasn't adding up. Okay. That's what it gets down to. So let's talk about the S corporation. When you have an S corporation, you file the form 1120S. Right? You take the business, pays its expenses to include wages to its officers. You take those expenses, any other profits and losses, all of that, including the wages, are passed through to the shareholder. Now, the S Corp also files employment tax returns. Those are your 941s. That's the type of return that's filed when you're paying wages. Now, S Corps, the rule is that you, the owner, have to be on payroll. Okay. It's not optional. Some people think, oh, well, I don't want to do payroll, so I don't have to. It is not optional. That's the rule. Okay. And so, you pay the taxes, the 941s on the taxable income that you paid for your officers. Okay. And then all of the profits, losses, again, are passed through, and then they're claimed on the form 1040 of the shareholder and officers, and that's on the Schedule E. Don't confuse that with the rental property. There is the portion of the Schedule E that deals with supplemental income. And that's where, that's where you'll see S Corp pass through information. Okay. And so then the S Corp passes through the information on a K1. So again, the S Corp is an information return, and that is the foundation for what gets reported on the personal return. Okay, that's how this works. And so basically, there should be some matches between what's on the S Corp return and what gets put on the K1 and what gets reported on the individual return. And that's what caused some problems for this person. It wasn't adding up. So for the firm's 2011 1120 filing, they showed a loss of $1373. They showed officer compensation and wages that were paid. The firm reported employee compensation totaling $41,000 and some change on its 941. However, for 2011, the personal return did not show any wages or salaries received. That is a problem, okay? And she showed the loss, but here's something that happened that I see a lot of people do that is just wrong. She then took, on her personal return, she filed a Schedule C and claimed the firm's income and losses, which is incorrect. So if you are an officer in an S Corp, if you are an officer in a C Corp and you are working in this business, you must be on payroll. You do not issue yourself a 1099, okay, and then claim the Schedule C. That is not how this works, okay? I had a client that did not want to comply with those types of things. And, I said, hey, if you can't comply, I can't help you because it's an audit waiting to happen. Well, here's an example of said audit. Okay. And so now, she figured out, okay, yeah, the Schedule C was wrong. So unless you are a sole proprietor or a single member LLC or even a qualified joint venture, if you are a married couple, there is no Schedule C for you. You have the other information reporting returns that then gets passed through to your personal return. Okay. And so it says that in 2012 and 2013, there were similar issues where the firm reported compensation and wages that differed from, the 1120 was different from the 1040. And, the personal returns did not match what the 1120 was reporting. Okay. So it showed all that in the court case. And then, it talked about the Schedule C. We know that's wrong. So you think about, what does that mean? That means that whatever loss or whatever expenses were claimed on that Schedule C are going to be gone. So that is going to be a change in income, which is also going to be a change in income tax. All right. So that's it about. All right, let me get to where they got to the decision, because there's some other stuff in here about substantiating expenses. We'll cover that in another video. But here's what what it boiled down to, that the commissioner was like, this is where I have problems. It was on her own personal tax returns, the failure to report the flow-through income for the firm for 2011 and 12, characterizing her compensation as wages or draws, and some cancellation of debt income. Okay, so it says that the firm reported income of $5,300 in 2012, but she only reported $2,600 on her personal return. And the commissioner said, no, we're going to adjust this to $55,000. And what she argued is that it was $11,000 too much because it should have been a return of basis. This is why you hear people asking about basis worksheets, and it irks me to no end, especially when you're going to a previous preparer asking for these basis worksheets. This is so critical, because when you have basis in a business, you do get a return of basis tax-free. But if you have no documentation of said basis, then basis does not exist. Okay. That's why these basis worksheets are so important. And so this is what the court case says. The commissioner proposed an upward adjustment of $55,755, but Ward, the plaintiff, argues that the figure was $11,470 too much because the code allows an S corporation shareholder to receive tax-free distributions up to the amount of basis. This is a legal mistake. This is what it says. It says income from an S Corp is not the same as distributions, which is true because the income is passed through. You might not necessarily take it out of the business, but you still have to pay tax on that. And so it is, basis is taken into account. But one, you got to be able to prove the basis. And distributions got nothing to do with income. Distributions are capital that owners remove from their corporation. So while income is gains and profits, distributions got nothing to do with that. All right. So an S Corp shareholder may pay tax on the corporation's earnings, keep the money in the corporation until later on, and then pay it to herself. That is a distribution. But in the year that the corporation earns that income, the owner must report and be taxed on it. Okay. And this gives you the relevant case law that goes with it and also the codes. And it says that Ward introduced no evidence that the firm's 2012 payout was really a distribution. So let's see what else. It says on her 2011 return, Ward omitted compensation and reported it as wages or draws and argued that only part of it should be taxable. That is wrong. So when you're talking about taking these S Corp distributions, first of all, you got to know that you have to be on payroll. Just taking distributions that's not how it works. And so now what this decision is saying is that, hey, you paid yourself these distributions. Okay. You took this money out of your business, but this should have been compensation in your performance as an officer of this S Corp. So they're going to have to go back and pay the employment taxes and all of that. And this is not, even though this decision has been rendered for this taxpayer, this is still going on, because now, based on the decision, that income is going to have to be reclassified. The S Corp is going to be responsible for paying those back employment taxes and all of that. And so this is ugly. And this is why you, as the S Corp owner, you have to be aware of what the rules are, understanding what's optional and what's not, how you take these deductions and all of that. When you're going out here getting this street committee tax advice about, all these different types of business structures, if you are not consulting with a tax professional about what the rules are, the implications and all of that, this can happen to you. Okay. And this person, we're talking about an attorney. And so one would automatically think that, oh my gosh, this is an attorney, they should know. Absolutely not. Don't let somebody's title, how much money they make, all of a sudden make them the expert on what to do with these business structures. That's just not how this works, right? I feel like that old lady, that's not how this works. That's not how any of this works. That's how I feel. So that is the, summarizing this court opinion in 15 minutes. But just understand that as an S Corp owner, there is way more to it than just trying to save on self-employment tax. That is the main reason why people elect S Corp treatment. But there's just a lot more to it than that. And so it was, like I said, it was very interesting that this opinion was published at this time, because we are at industry wide, we are seeing it, people with these business structures that don't know what to do and are having to pay the price. And then when it comes to us to help you try to fix these things, there is a larger cost that comes along with that most people cannot or are not willing to pay. Okay. So that's it for this part of the court case. Like I said, I'll shoot another video talking about the disallowing of expenses, because that was good too. Okay. So if you stuck with me for this long, thank you so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.